Morning. Good
There
morning.
he is. There he is. There's Nick. What's going on, Nick?
Oh, the usual. How about you guys? Been listening to the show. Some pretty good debates going on.
What do you think of the VXX and, looking at those types of products? Do you trade those things ever or do puts on them or is there other
No,
ways we can play the short side on those or the premium's just too expensive?
I don't do them at all. I have, even when I get it right direction wise, I never seem to be able to make money with the premium. So I just use it as a gauge. Not the VXX, just the VIX. As broken as it is, I think it just like I think last week I was saying when it got down in the low tens or wherever it was, I said it doesn't leave much room for error. And regardless of what it is, I look back to the 5 years and it's at all-time lows. So where does it go from here? Unless it's going to break sub 10, and it hasn't in a while, I expected it to move up. So it just leaves no room for error.
What are you looking at today? What are you thinking? We've got this market that just sits here and does nothing all day yesterday. Joel's saying really it did nothing all day Friday during the day. And we're sitting here in a 6 point range in the pre-market here too. Are you expecting more of the same?
Yeah, you know what? This is bizarre. It's like it's time to sit back and just reevaluate the whole picture. And Joe and I were talking back and forth, and yeah, he was saying that the range is so tight and it can't stay there. I agree. And all the highs we've made were after hours. If you notice, we've had pokes after hours, and we didn't match them during the open hours. Regular hours, regular session, I should say. And last night we didn't even do the regular session numbers. So today might be telling, but the overall risk, I want to zoom out really and see what's going on and where we headed. One thing I've been saying this year, that this is not 2013 where the bull will just pop and pop and pop and pop. This year the bears are not scared, and it's and last week the Fed pop kind of reminded us that with the proper headline, the bulls still have some run in them, but vice versa is also correct. So it's more of a fair game. Last year it was clobbering the Bears all over the place. This year is a fair game. And it seems like the Bears are always just doing just enough to keep the lid on the markets. Even though we are at all time highs, it doesn't feel panicky from the bear side. I don't know a lot of bears that are scared. I do have a couple of short positions, and I'm not scared for them either. So it's time to look at the overall mid to long term trade and see if you can lay some big ones there so you don't sweat the small stuff. Meanwhile, if you can get some premium sold in this stalemate that I've been calling, then you might be able to put a couple of bucks in your pocket.
You know what almost it feels like to me is that the higher we go, the more big selling you're seeing, the more institutional size. It's just people are just like, this is enough. I'm selling here. And what you have is you have the high frequency traders stepping ahead of those big institutional sell orders, and they're not looking for a lot. So if it goes up and it hits those levels, if they're trading size ahead of that size, then it pulls back, then they're just going to take the little profits that they have. It just seems like, it's kind of like Dennis, you talk about the tractor beam, but that just seems to be happening in the market. I don't really see the size on the downside. I see, more of the big offers on the outside trying to get out, the high freaks trading against it, and just taking small profits and then forcing the market back up again.
That would explain the stalemate, right? And in fact, this Sunday paper business section headline, I just picked up the paper. I usually don't read that section, but because it's old news, I can't
What
believe they
paper
still
do
make
you
money
read?
on papers. But
I didn't know they
the
did.
What paper?
exactly the piece of the big headline, the big whole page. It says "Missed the boat" with a question mark, and it said "Retail investors, that's you. You're rushing to catch up. 5 years old market bull." So they're saying, kind of, you dumbass,
Gonna
stop
buy the
chasing.
highs again.
Yeah, but yeah, absolutely. I think you're right. And one thing I learned this year is you can't overstay your welcome in a profitable trade because it may spit back in your face in just 10 minutes later.
Yeah.
So, and I've been doing this. Last week, I had a few winning trades that exited early, pocketed some change, and I left a lot on the table, but I really don't care. Hindsight, yes, I could have stayed longer, but it also could have flipped the other way. So any green I see, I book because you don't know if it's going to be here. So, um, and I think that's what's providing support. Like also last week in the open interest, I was saying that the small caps had room to move. Okay, they weren't like destined to move, but they did have room to move if they wanted to, and they did a little bit. This week, I don't see the room to move for them. I see a little more downward pressure, but I also see much better support. So that also supports what we're talking about here. That there's no, doom scenario, but where's the catalyst to get us up there? So it's kind of a stalemate, and God knows how it's going to end up. I still think the Bears still haven't given up on the 1950 SPX. I think the fight wants to be there based on the open interest.
I give a shout out to Joe Saluzzi here because he always talks about the vice grip, and I don't know if Joe's listening. He listens sometimes. The vice grip is something that he talks about where the high frequency traders get so competitive where it's just, the market's not doing anything and they need to make money. They have huge expenses. So their market making gets more and more competitive in this low volatility environment. They're just competing at each other to get that spread on the bid and the offer, and it tightens everything up until there's some type of news event where they see the risk increase and then they all cancel and get out of the way. And that's when you get these sudden moves. But I feel like we're right now, kind of you talked about the tractor being drilled, but it's almost like both sides. It's just a vice grip right now where the high frequency traders are starving to death because they have huge expenses and there's just not the volatility there. So it's really competitive right now, and that's just tightening up the overall market.
It just last week there were some funky moves. I expected some moves that didn't happen and other moves that floored me. So like in Google, I made a couple of plays and ended up with a push overall. I was trying to play the open interest at the 550 Goog, and immediately started going down to 550, 551, and I exited. And then I said, you know what, I'm going to rinse and repeat with the house money. And I did. And then it just shot up out of the blue against everything. It's like, what is going on? So I ended up with a push. I lost the house money, but overall, I didn't lose money, but it was kind of a heartbreaker there. So there's some funky stuff going on for sure, and this could explain some of it, and I just think we're all just sitting and waiting for something to happen. Geopolitically, I always mention that because you got to zoom. Let's talk about risk, okay? Now, I have the number one thing now jumped on my list. It's not geopolitical. It's not Argentina. It's not this, not that. It's Janet Yellen. I have no faith in her anymore. She needs to prove she needs to prove herself to me again. First we were all eyeballing the 6.5%, months ago, as the threshold that we were okay. They're going to start tightening because that's the big T word, and it's going to cause some ripples. It has caused every time they've done it before in the past. So waiting for that, and then Bernanke comes out and says, you know what? Forget that 6.5%. We've got some funky. They explained it that it's no longer a valid threshold for us to use. So let's look at the CPI, a much better threshold. Great. So now we demote that and we promote the CPI, and then she comes out in one stupid, unplanned side statement saying, "Oh no, don't forget about the CPI." It's like, what? What are we supposed to look at now? So that's two comments she's made that are game changers, and she made them almost unplanned. The 6 months comment from a while back, and this comment. So it's like she's just stalling to see something happen in order for her to say, "Oh, okay, then I'll do this."
Well, that's what the gold market said to her, and it had the big run up. They felt that she was a little bit soft. Now gold is getting some follow through on the upside here, breaking above 1322. So, we had a lot of false pops in the gold market here, especially over the last few years. But it seems like the gold market's trying to tell us something.
Maybe. I don't. Big candle, big gap. So that's a big statement, like you're saying. It's not like okay, I'll run up for a day or two. That's just a leap. So we'll see where now it's coming up. I'm looking at the GLE to see if that's any indication.
Do you like this market, Nick? Like for your strategy, because you're always writing premium. Is this just a market that you can sit back and collect, or is the premium so low right now that you actually wish would get some volatility?
No, you can collect premium. The only problem is you would have to get tight. You would have to get closer to current price, and
High risk.
then you get jittery. because I'm not the premium seller at the line where you got big gonads and you go all in right at the line and big. That's not me. I'm more the cautious type. I want high probability, low premium. I'll just hit base hits, try to get base hits as opposed to swing for the fences at every at bat. And so it makes it harder because then you have to tighten. So my solution is I have my theory. If I say, okay, we're going to meander, we have some room to go up, but not a lot to go down. So I'll go out in time and sell credit call spreads higher than here, with give myself a little room. And then if they start taking a little bit of heat, um, or on some big drawdown, I will, oppose them with some credit put spreads either at the same timeline or closer, in order to make my break even point higher on those credit call spreads. And if we do get a pullback anytime this summer, then those credit call spreads are all money, and then you can start booking them. So you can change your strategy a little bit. It all depends on your thesis. My thesis is we're going to meander. We have some room to go, but we may pop, but they're relief pops. Even the Fed pop last week, it was just a relief pop that they didn't say anything bad. It's not like they changed the game, although she may have with a stupid statement. I'm not sure, but they're more relief pops that it could have been worse. Oh, thank God. Bye, bye, bye. So as opposed to, oh, let's go, full speed ahead for the next 6 months type of a run. So I adjust to selling further out in time and higher to collect a premium, yet still stay with a good buffer from current price.
What about Apple? Me and you have been going back and forth on this, and now you have all the split buyers a little bit underwater here. Really can't seem to get a lot of follow through on the downside here. Just looking at Apple and just the interest, the open interest in the calls and the puts. Where are they going to try and pin it this week?
It's been pretty clear, if you can believe it or not. My level calls on Apple the last couple of weeks have been pretty close to almost dead on, actually, and that's based on the open interest alone. I'm not a genius that way, but if you look at like a 10-day trend from the 95 high, 95.05 high, it's just straight down, and it could bounce here, but this is where it's important. It's the open interest this week is not favorable for it to bounce. In fact, 91 is resistive, 91.43 is a lot more resistive, and so on as you go higher. 90.71 could also be pulling it down to it. And if it does succeed to, like, say, 90, bring it down to 90.50, 90 is the highest open interest, the next highest open interest, and it's somewhat supportive, but almost even. So it might be a magnet for this week. And if it gets down to 90, then I don't like Apple here, because then in theory it becomes like, okay, they tried to push it up and they failed. They tried to push it up. They got it higher to the 95, and then they failed, and they tried to, again. They didn't even come close to it. So it's kind of like head and
Yeah,
shoulderish
exactly.
in nature.
Exactly. I was going to say that. I mean, it's who's left to buy now? You've had the run up, the great run up after, the last earnings and the buyback, Carl tooting his horn, and now you have that left shoulder, kind of formed, and now you're getting an extended right shoulder there.
Yeah.
Just I don't know. It just seems that it just goes down, but it just I guess we're so used to watching it when it's a $500 stock that now these moves are just not as
Muted.
pronounced. Yeah,
Well, yeah,
90-60's been the low though since the split.
it's hard to visualize it because of the split, but it's really, if it gets down to 90, it's $630. So if you want to I still revert to those old numbers, because I've been saying that since it started, it's, when people fell back in love with it before the split and they ran it up. I said the closer you get to 700, the love for it is going to wane, because so many people got hurt at 700 the previous time. There is no way they're going to be so bullish when it comes to 700 again. I mean, that would be the surprise of the century for me. And the love is fading now. And I don't know where the money's going, but it's probably spread. And so, where's the next catalyst for Apple? And I wrote a piece like you did. Hey, don't feel bad about those hate mail for Apple. That just tells you who's buying it, and if you know who's buying it, then the run is probably over for now. So it's the next level. Okay, I wrote a piece. They came out with the iWatch, and suddenly now it's not just the iWatch. The iWatch seemed always to be married with talks about how to use the iWatch with regards to healthcare and revolutionizing healthcare. Now, that I can buy as a flying car, okay, because that would be a game changer in an arena where they're not in now, and that definitely needs help. So I was watching a sci-fi show the other day, and they had a cool looking watch that eerily looks similar to that Samsung black bracelet that they sell, and that's what it does. It watches over your health, but it also fixes you with nanobots, but that's down the line. But
Well,
it's
that would
that
really
I
be great if they could come out with a watch that could diagnose all your mental disorders. Then then you can short psychologists there. But
Yeah, but that would be a game changer, and that I can buy into a next leg up for Apple long term. Midterm, short term, I don't worry about the company midterm. I mean, obviously, it's the premier company, and everybody's jealous. Everybody would want to be it for just an hour a year or something, because it's a really successful machine, and I wouldn't short it based on the fact that it sucks. I would short it based on price action, and but as a company, midterm, it's no doubt a winner, and they're going to find a way to make money. I mean, they have all the resources, and they have the whole infrastructure is there. All they need is just to do it, and it's just a matter of time.
I know you like to play the price line here, and that's come off here. The street gave a thumbs down to that buyout at open table here. Really slammed the stock, and it's having a hard time recovering. And I know you talk about the stock being a cash cow here. Are you comfortable? Selling some leaps, some longer term puts down here. Perhaps put you in a long position at 1170, 1160, because you've been hanging out around this $1,200 level for a long time.
That is an important level for price line, because first of all, since we last spoke after I successfully sold those leaps, I have not touched it. I missed out the opportunity on the pop last week to sell the leaps. I just chickened out. I just didn't need the drama, and I was busy that week, so I was like, you know what, I'm just going to stay out. But now I'm looking at it between 1180 and 1230, 1235 to see what it does. Yeah, it sounds wide, but it could move $40 in a day.
Yeah, of course.
So
Yeah.
I'm not too worried about it. So I'm going to see how it behaves around here. If it wants to revisit the 1180s, then when it does, I'll probably sell some puts in it, leaps, hundreds of points lower, and collect, 20, I mean, $20, $25 or something like that. And then if it starts getting weak, I'll immediately turn it into a short strangle and sell some calls into it just to hedge my bet. And otherwise, I'll see if I can scalp a few bucks there on a rebound. But if it comes back up to 1230 or so, then it might have a chance to break back out again. But at the 1200, it's on my, I wish you can see my chart. I have a dotted green line on there, and it's a line where it's failed at before. In other words, it acted as a roof, and if you that starts December, I think, of November, end of November 2013, and it just couldn't break it for months, and then suddenly in February, it just boom shot out of a cannon to a mountain peak, and then it reverted immediately. So I immediately cross out that mountain peak and then say, okay, now we're back to 1200. It poked over it a few times, but it failed. And then it failed below it, and now it's back up and at it. So it's the level that it's having the biggest fight since last November. So
You
I
let them
sit.
battle it out, huh?
I'll sit and watch and I need confirmation either or. I don't want to chance it. I could try to scalp a little bit of iron condors here, but that bad boy moves pretty fast, so I better be nimble and I better be really good with my discipline to close the loser quickly.
Okay, we've had Nic Chahine on, Market Fi Maven and author of Create Income with Option Spreads. trying to find some trades for us in this low volatility market. Nick, thanks for your input, and we look forward to talking to you next Tuesday.
Look forward to it, guys. Thank you so much.
Thanks, Nick.